Buying a home in 2025 feels tough. I know, I'm a lender and I'm having these conversations every single day. So let's get real. I mean, you're hearing it everywhere. The rates remain high. Homes are too expensive and it's simply not affordable anymore. And if you're like most buyers, you're wondering if it's better off just waiting. And I get it. This market is challenging. But here's what no one is telling you. That there's always a way to win in real estate. There are strategies to lower your rate, to structure your loan smarter, and negotiate better deals. If you know how to play the game, you can get into a home and start building wealth right now. So today, I'm breaking down the biggest challenges buyers are facing and the real solutions that are helping people get into homes every single day. Because waiting, that's not a strategy. Smart moves, strategic financing, and creative negotiating, now that's a win. So let's get into it. So let's talk about the 4 biggest challenges I'm seeing holding buyers back right now. The first is most obvious. Interest rates feel high. And yes, there's no denying that they're higher than they were. But there's always ways to lower them. The second is affordability. It's tight. Prices keep going up, but that doesn't mean you can't make it work for your budget. And then there's inventory. It isn't quite right. Whether your market has more inventory or less, the home you want may not be in your ideal area or price point. And then lastly, condos. Because condos bring additional financing challenges, but they also create a major opportunity for first-time home buyers and those looking for affordability. So let's cut through all that noise and talk about real solutions. Because I know that interest rates are the number one thing that's stopping most buyers from purchasing a home right now. But here's what no one is talking about. You don't have to settle for today's rates. There are absolutely ways that you can strategically lower them. And here's how. The first is one of my favorite. It's seller paid rate buy downs. And sellers today are much more willing than ever to offer concessions to help lower your mortgage rate. So instead of negotiating the price point, negotiate seller paid points to buy down your interest rate. As an example, a 2-1 buy down could drop your interest rate from 6.5 all the way down to 4.5 in year 1, saving you hundreds per month. And on the flip side, there's a permanent rate buy down where you can negotiate a seller credit to permanently reduce your rate, locking in your savings today for the life of the loan. I mean, this strategy can mean the difference between affording the home you want and feeling priced out. And then the third is one of my favorite because it's an internal program to Movement Mortgage. It's the Movement Boost program. This is an FHA loan that I can lock in as low as 4.99. And this program allows a seller to pay up to 6 discount points to bring your rate down permanently. Plus, it comes with down payment assistance. If you qualify, this is one of the strongest financing options out there right now. If you want a deeper dive on these 3 strategies, check out the video that I just did last week, where I cover each one of these strategies in much more detail. The second objection is affordability. And affordability isn't just about interest rates. It's about your total monthly payment. So how do we make home ownership more affordable right now? Well, we just talked about seller concessions, and I suggest that you use them wisely. You can also use seller-paid closing costs to lower your out-of-pocket expenses. I mean, more sellers are willing to offer incentives than ever before. That can put more money in your savings account to help offset your mortgage payments on a monthly basis. The second is to switch loan programs. Now, this might seem counterintuitive because you got pre-approved for a specific scenario. But here's the deal. FHA loans allow higher seller contributions, literally up to 6% of the purchase price versus 3% on a conventional loan if you're putting minimum down. So switching from conventional to FHA can lower your down payment and reduce your monthly payment. Another option is to get creative with down payment assistance as well as access to other funds that you might have. I mean, think about getting a 401k loan. This is money that you're borrowing against yourself, so I don't have to count it in your debt to income ratio. Ask around if you've got opportunities for gift money. I know nobody likes to ask family for money, but when it comes to building wealth and buying your first home, you'd be surprised how many family members would be all in. And then double click on that down payment assistance. Just because you don't think you need it up front, it can free up cash so you don't drain your savings. Some programs even allow for 0% down depending on your situation. There are options. You don't have to figure this out alone. The third strategy and obstacle that we were talking about is inventory. Inventory is higher in some areas, specifically in the Denver market, and it's lower in other areas. So if you're thinking, I just can't find the right home, here's how to expand your options. Explore assumable loans. FHA, VA, and USDA loans are all assumable, meaning you can take over the seller's low interest rate instead of getting a new loan today at today's market rate. I mean, if that seller has a 2.75% interest rate locked in, you get to assume that rate and that monthly payment instead of getting today's 6.5% rate. Also, look at homes that have been sitting on the market longer than normal. I mean, days on market are up, and use this to your advantage as a buyer. Homes that have been listed for more than 60 days often have motivated sellers who are willing to negotiate. This is where you can secure seller credits, price reductions, and interest rate buy downs. And if you're looking to move up, you've already purchased your first home that you've now outgrown, consider a buy before you sell program. If you're a move up buyer, but you are worried about selling first because you can't find the right next home, there are programs that let you buy first and then sell. This keeps you from having to move twice or rush into a bad deal that you're going to regret in just a few months. And lastly, I do want to double click on those condos because condominiums are one of the most affordable paths to homeownership. But buyers often run into financing challenges. So here's how to turn that financing challenge into an opportunity. Check if it's FHA or VA approved early, especially if you've served in the military. I mean, some condos aren't eligible for FHA or VA loans, but many are. And there's a website for each one of them. Here's the coolest part is VA eligibility never expires. So checking this up front gives you options and saves time and headaches. Now, if a condo isn't FHA approved, don't give up. We have a fantastic condo department that has been approving entire condo projects for FHA. So see if this is an option with your lender, and if not, give me a call. Now, conventional loans offer more flexibility. Even if FHA or VA financing isn't available, a conventional loan might still work. Some lenders can work with non-warrantable condos as well, depending on HOA reserves, litigation, and commercial use. But here's the most important part. As a buyer of a condo, you need to assess the monthly costs beyond the mortgage payment. Factor in HOA fees, assessments, and insurance when calculating affordability. A lower purchase price doesn't always mean a lower total monthly cost. Make sure that those total numbers make sense. Condos can be a smart stepping stone into homeownership, so don't overlook them just because they come with extra financing considerations. With the right lender and the right strategy, they can be a great option. Look, I know headlines make home buying sound impossible, but the real story is that buyers are getting into homes every single day. They're winning deals. They're lowering rates and negotiating better terms because they're working with lenders and agents who know how to make it happen. Waiting on rates to drop, that's not a strategy. Getting into a home that you can afford, building equity, and refinancing when the time is right, now that's how you win. If you're serious about buying a home, don't sit on the sidelines. Let's have the conversation. What's your budget? What programs do you qualify for? And how can we structure your deal to win? Drop a comment, send me a message, or click the link below to start the process. And if you found this helpful, please like, subscribe, and share this with someone who's thinking about buying. I'm Nicole Ruth, your trusted mortgage advisor and real estate expert, helping you build wealth through homeownership, one smart, educated decision at a time. I'll see you on the next video.